Okay, so today we're going to look at question 5. Question 5 is a very comprehensive question. As you'll see now, it is a very long question. It is if you're going to write it in an exam, it's probably going to take you the better part of 2 hours. I would say around about an hour and 45 minutes. So it's long, and if we are going to have to discuss many of those things, which we will, then clearly it is unlikely that we are going to be able to finish it within 2 hours. Okay, so this is the question, and you know that you can find it in that folder, the folder under content, and then we've got notes and question banks, and then we've got the IAS1 notes and questions, right? So it's the 5th question there. Okay, so like we very often say, it's a good idea to go and have a look at what is required of us first, and then we can work through the question. Before I do that, I just want to give you a layout of this document, and before you even put the request in, yes, we will load it to Blackboard once we're done with it, because we are going to probably put in a few answers and make a few calculations and so forth. So what the document looks like, the first few pages contain the question. So as you can see, it's a long question, 3 pages long. Then I've already posted a suggested solution there, which we are obviously going to work through. Many pages. Some of those are just for our own purposes, for our own working. So not all of that is required in the question, but most of it are required. And then right at the bottom, I've just created a little working area for us, or a whiteboard or a working space, in case we need to go and do any calculations or do any further explanations or have any further discussions that we'd like to put in words. Okay, so let's go and have a look at what is required of us. And I already mentioned in the email where I announced the link that this is comprehensive, and that, you know, this, if you can master this question, you can go up two steps of the ladder in becoming a professional accountant. Okay, so what is required of us? Let's just work through that first. 5.1, they say prepare general journal entries on the 31st of December 2013 for additional information, paragraphs 2, 5, 8, and 10. So clearly we know that we are going to have to do some journal entries. Then in 5.2, use the table provided to allocate the relevant costs to the distribution and administrative expenses. Now I know Mr. Borman hates it when I change questions, but I'm going to change that a little bit. I'm going to say use the table below to allocate the relevant expenses. And I'm going to talk about this just now, about expenses and costs to the distribution and administrative cost functions. Okay, so there, ladies and gentlemen, we are going to talk about this in a few minutes, but there we could already get an idea that the expenses that have been provided to us have been presented by virtue of their nature and not by virtue of their function. And like I said, we're going to come back to that just now. So we must go and take those expenses and allocate them to appropriate cost functions, and they've already provided us here with the fact that this company has got a distribution function and an administrative function. Then 5.3, prepare the statement of comprehensive income by function. We'll talk about that soon. For the year ended 28th of February 2016 in compliance with international financial reporting standards. Then 5.4, complete the statement of changes in equity for the year ended 28th of February 2016. Already we know now when the year end is, right? That is important for us. So the year ends on the 28th of February 2016, although I suspect that might have been a leap year. But anyway, then we go to paragraph 5.5. They say prepare the statement of financial position at the 28th of February 2016. Once again, now we know that is our financial year end. in compliance with international financial reporting standards. There's an invitation that you can show your calculations in brackets. Well, that you won't be able to do in an online test, obviously. Then paragraph 5.6, prepare the following notes to the financial statements of the year ended 28th of February 2016 in compliance with international financial reporting standards and the Companies Act. And then they require a few notes there, statement of compliance. We are going to do that one. That is required of us. We have discussed it already. Amongst the accounting policies, we are only going to look at the basis of preparation. In the third term, we are going to revisit property, plant and equipment. You know, you started a little bit with property, plant and equipment in Financial Accounting 1, but now we're going to take it further. We're going to go to more complex situations. So we're not going to look at that note in particular today, but we are just going to use the note to do some of our calculations when we draft our statement of financial position. And in the inventory policies, well, inventory policies, you should know most about that from Financial Accounting 1, so we're not going to revisit that. By the way, that property, plant and equipment falls under accounting policy. So it's your property, plant and equipment policies, right? It's not the actual property, plant and equipment note. It is, there's the note. So the policies with regards of property, plant and equipment we'll do in the third term. Inventory you've already done. Then we're going to look at the revenue note. We're going to look at the profit before tax note. We might have to look at the dividend note. We'll see later on. Like I said, the property, plant and equipment note, we're just going to use for reference purposes. And the share capital note, we've provided it here, but we're not going to actually go into that. We're just going to do the basic issue of shares calculations and journal entries. But share capital is the very first topic we're going to be doing next term, right, in term 2. So then we are going to look at share capital in more detail. But now already you must just be aware of the basic principles regarding share capital and the issue of share capital. Okay, so that is what is required of us. So now let's go back to the question. So here they say Bargain Limited is a retailer listed on the JSE Securities Altex listing. Now let's maybe just explain that. It is not really for exam purposes, but as you know, in Financial Accounting 1, we did mostly sole traders and we did partnerships, but now in Financial Accounting 2, we are doing companies. And companies are normally very large entities. Now the Altex Exchange is a separate little board on the JSE for smaller companies, right? For smaller companies than those huge companies that are on the main board. But still, the fact that they are listed on the Altex board doesn't mean they are small companies. They are still huge companies, but they're just not as big as the Anglo-Americans or the Pick n Pays or the ShopRite Checkers of the world, right? But they are still substantial companies. Okay, so now we've got a trial balance here. Let's just briefly go through the trial balance. When we get towards the bottom, I'm going to ask you a few questions. So here we see we've got ordinary share capital, we've got a revaluation surplus, retained earnings. So all of that is part of our equity, right? Then we've got land at cost, we've got buildings at valuation, we've got buildings accumulated depreciation, equipment at cost, equipment accumulated depreciation. So that clearly all has to do with our non-current assets. Then we've got long-term borrowing, so that is a non-current liability. We've got accounts receivable, inventory, bank. Okay, those three, they are part of our current assets. Then we've got accounts payable, that is going to be a current liability. And then we've got things like sales, services rendered, cost of sales, depreciation on buildings, depreciation on equipment, salaries and wages, operating lease of delivery vehicle, packaging for purposes of sale, telephone expenses, electricity expenses, and finance costs. Okay, so those are clearly all items that belong either on the statement of profit or loss, or as we are going to use, going to apply it in Financial Accounting 2, we are going to use the one statement approach, which Mr. Borman discussed last week with you, the one statement and two statement approaches. So we're going to have one statement, and we're going to call that statement our statement of comprehensive income. Okay, ladies and gents, now my first question for you of the day, and I'm going to ask a few now. From what Mr. Borman taught you last week and some of the things that I said in my recordings of classes, ladies and gentlemen, there are two ways in which you can draw up your statement of comprehensive income. There are two methods that you can use. So now I want you to type for me, what is the method that is most appropriate for smaller entities, smaller businesses, such as sole traders or partnerships or very small companies or close corporations. We still have some close corporations around, excuse me, even though you're not allowed to register new ones anymore. So what is if you can type for me there in the chat facility, what method to draw up a statement of comprehensive income is more appropriate for smaller entities? Have you been attending last week? Start. There we go. Thank you, Shanley Ramrock. The nature method, right? The nature method. So that is more appropriate for smaller businesses, simply because smaller businesses will probably only have this number of expenses, and there are only about 10 or so. So you can fit them all in on one page. And remember, we said the other day, when it comes to your financial statements, you want to present each statement on one page. You don't want your statement of comprehensive income to have a page 1 and a page 2 and a page 3, because by the time the user gets to page 3, he or she has forgotten what happened on page 1 and 2, right? You want them to see at a glance on one page what is the results of the operations of the company, right? It's performance, in other words. That is what the statement of comprehensive is all about, is a picture of the performance over a period, right? Or they want to see a picture snapshot of the company's financial position on one page. But ladies and gentlemen, when it comes to larger companies, big companies, right, multinationals and so forth, they might have hundreds of various kinds of expenses, right? So it is therefore normally not appropriate to use the nature method when it comes to large companies, right? So therefore, IAS1 provides us with a different method to draw up our statement of comprehensive income. What do we call that method? We've used the word a few times. What do we call that other alternative method? The function method. Thank you, Kosa. Thank you, Shanley, again. The function method. Okay. Now, if we have a look at this trial balance in front of us, we can see there things like depreciation on buildings, depreciation on equipment, salaries and wages, operating lease. So those expenses, thank you, Glody, as well. Are they presented to us on the nature method or on the function method, as we see it there in the trial balance? Nature or function? Nature. Thank you, Kosa. The nature of the expenses are indicated there. So we can see the nature. Remember, we said the other day, I think I typed it in the chat box, the nature is basically what it is, and the function is what it does, or where it has some functionality in, right? So here we see the what it is. So it's depreciation, it's salaries and wages, it's an operating lease, and so forth. So they are presented on the nature method, right? So we must clearly now, if we are going to be drawing up the statement of comprehensive income on the function method, one of the things that we have to do is to go and allocate. And this is the term we are using, allocate those expenses to cost functions. We'll see later on, and I think in the question itself, we've already seen that we are referred to an allocation table. Okay, ladies and gentlemen, what I also want to point out about the 5 questions you have in that question bank about IAS1. If you look at questions 1, 2, and 3, you will see the expenses have already been allocated to cost functions, right? So you don't need to go allocate them. You just need to know how and where to disclose them. But then the other 2 questions, the big difference between questions 1, 2, and 3 on the one hand, and then questions 4 and 5, question 4, which Mr. Borman is doing, and question 5 is there. We must still go and allocate the expenses to cost functions, right? So that is the big difference between the 2. Okay, but before we can even start thinking about drawing up the financial statements, we must now know that they required some journal entries from us. And here, ladies and gentlemen, make a note on paper or make a mental note, very important. As soon, remember, if you are presented with a trial balance, as soon as you start doing journal entries subsequent to that trial balance being drawn up, in other words, you've drawn up the trial balance, but now you still have to do, or you still are going to do some further journal entries, it means it changes the figures in your trial balance, right? So each journal entry will effect a little amendment of the trial balance, right? So remember, if you are doing journal entries and later on you start drawing up the financial statements, you must take into account the trial balance, but also all of your journal entries, right? Okay, so now let's go and have a look at the rest of the question. So if we scroll down, so we've looked at the trial balance. Now they give us some additional information here. So let's have a look at that. They say the authorized share capital comprises 1 million ordinary shares of no par value. 100,000 shares were issued at 10 rands on the 30th of November 2015. Now, ladies and gentlemen, before we carry on here, there are a few things that I only realized basically over the weekend that perhaps we should talk about this first, because we haven't really done companies in financial accounting 1. Now, a lot of what I'm going to tell you now is really what you are going to be learning from commercial law, if you haven't already. If you have, fantastic. If you haven't, you will still learn about this. But a few things we must understand about a company. A company is a judicial person. From a legal perspective, a company is a judicial person. Now, what does that mean? What does that mean if a company is a judicial person? It means it is almost like a living. When you go and register the company at the CIPC, the Companies and Intellectual Properties Commission, when you go and register the company there, or your accountant does, or your lawyer does, right? When they go and register, it's almost like a new person being born. So that company has got a personality of its own, right? It's got a living right of its own. So it's not like a sole trader or a partnership where the assets belong to the sole trader or one of the partners. Here the assets belong to the company. And the liabilities are the obligations of the company, not its owners, right? The clever word that the lawyers use for that is in the case of sole traders and in the case of partnerships, especially partnerships, the partners are jointly and severally liable for all the company's liabilities. What it means, they all together as partners jointly, they are liable in their personal capacities for the liabilities of the partnership. But a creditor can also address one specific one severally, so jointly and severally. Sounds unfair, but you know, if there are 3 partners and 2 of them are bankrupt and the other one's got money, all the creditors are going to jump on that one that has money, right? Because each one is still individually liable for the liabilities of the partnership. In the case of a company, no, ladies and gentlemen, the shareholders, which are the owners of the company, are not liable for the liabilities of the company. It's the company itself, because it is regarded as a person. It's not a natural person like you and I, but it is a judicial person. But it's still a person. Okay. Then what are shares? What are shares? Shares are, well, what does the word share mean? We're sharing something around, right? We're sharing something around, a little bit for you, a little bit for me. So shares are instruments. They are equity instruments issued to the owners of a company. So each person who owns shares in the company is a part holder, is a part owner of that particular company. Now, like I said earlier, we are going to look at share capital in detail next term. Right, our very first topic in this second term will be share capital. But already now you must understand the difference between a company and everything you've been doing so far in financial accounting, right? And also you must understand what shareholders are. So those are, in the old days, it used to be physical certificates. Nowadays, it's digital certificates. But still, each person that becomes a shareholder, a part owner of the company, will be issued shares, right? One person may hold 1,000 shares, another person may hold 50 shares, another one may hold 2,000 shares, but they are all joint owners of the company, but they are not liable for the company's debts, and they do not own the company's assets either, right? The company owns them. Okay, having got that off my chest, so we now know that that is the structure of the company. The company is allowed to issue a total of 1 million shares. The of no par value we'll talk about next term. And 100,000 of them were actually issued at 10 rands each, which means the company has got an issued share capital of 100,000 multiplied by 10 rands, right? So that will be 1 million. Let's go and have a look. Okay, sorry. We will see that there were some shares issued during the year, right? So that is why that is 5 million and not 1 million. So we'll see a little bit later, some shares were issued during the year, if I remember correctly. Anyway, so where were we? Then in the second paragraph, they say the buildings are used for the supply of goods and for administration purposes, right? So they've got buildings and they are used for the supply of goods, but also for administration purposes. They say the buildings were revalued on the 28th of February 2016. So let's maybe just highlight that. That is the last day of this financial year that we are now reporting on, right? So that is important. In other words, that happened during the course of this financial year. And then they say it was revalued to a fair value. You remember we said when we looked at the conceptual framework that a company can use many valuation bases, one of them being fair value. So this one was revalued to a fair value of 7,500,000 rands. Ladies and gents, that little two-letter word there is very important. Make sure that you read that correctly. So it was revalued not by 7.5 million, it was revalued to 7.5 million. So after the revaluation, the amount that will appear in your trial balance, the amount that will appear in your statement of financial position as part of your property, plant and equipment will be 7.5 million, right? So it was revalued to 7.5 million. And then they said this represented an increase of 780,000 rands over the previous carrying amount. This has not yet been processed. And they also add there are no deferred tax consequences from this revaluation. That you can just ignore for the time being, ladies and gentlemen. Deferred tax is a topic that we will address in Financial Accounting 3. Okay, so they probably didn't even need to give us that amount. Let's just see what the value is as it stands. Land, where is it now? Land at cost, 1,270,000 rands. So if it is going to be valued upwards to Is that now correct? 27. No, sorry, the buildings, not the land, the buildings. Sorry, the buildings. So the buildings as it currently stand, ladies and gentlemen, has got a cost or a valuation of 8 million, and it has got accumulated depreciation of 1,280,000, which means that at the moment the carrying amount of the buildings would be what? If you can work that out, if you can grab a calculator as it stands, let's just check. The buildings, it's 8 million minus 1280 minus 1280 000. So as it stands, the buildings have a carrying amount of 8,720,000. Do you agree? If you can perhaps just start for me there in the chat box. Did I make a mistake or am I correct? So as we stand, you can just say yes, you're right, or no, you're a dummy. So as it stands, it has a carrying amount of 6,720,000. Is that correct? So I'll get to you just now. Let me all see. Leonardo, yes. Thank you, Mr. Chanchane. Yes. Okay, so 672. Calypso, now I'm going to answer your question. Calypso Makena, just now listen carefully. So as it stands, as everybody has confirmed there, the carrying amount of the buildings is 6,720,000, right? The valuation less the accumulated depreciation since the previous valuation. Okay, what they are saying now, Calypso, we are going to revalue it to 7.5 million. Now listen carefully, Calypso, and everyone else. If they had said we are going to revalue it by 7.5 million, it means we are going to increase the carrying amount by 7.5 million. So then we're going to debit the building's valuation by 7.5 million, right? But now we just want to increase the fair value to 7,500,000, right? So by how much do we have to increase the valuation now? 7.5 million. Let's see, do you get that? We want to revalue it to 7.5 million. So by how much must we revalue it? 7.5 million, which is now our target figure, the fair value of the buildings as at the end of February 2016. But in our books of account, currently it stands at 672. So if we deduct that 672,000, 6,720,000 from the 750,000, what does it give us? 600 and oh, and then we must still go and yes, thank you, Mr. Borman. There we go. So 750,000 less 6,720,000. Okay, so that is how we get that increase. Thank you, Leonardo. Thank you, Glory. Okay, so does that answer? Who was it again? Colette, does that answer the difference? Thank you, Mrs. Moore. The difference between revaluing it by and revaluing it to. If you revalue it by 7.5 million, you're going to increase the value by 7.5 million. If you revalue it to 7.5 million, you're just going to revalue it to that figure. In other words, you're going to increase your total carrying amount by the difference between what it is truly worth now fairly and what your carrying amount is in your books of account. Okay. Then, okay, we've covered that second paragraph. Then, before we do the journals, let's maybe just have a look through this as well. They say the building is 350 square meters in area, and the building is used as follows. So 200 square meters is used as a warehouse. It is used as a warehouse. Now, ladies and gentlemen, if you can type for me in the chat box again. You remember we said this company has got two functions. It's got a distribution function and an administrative function, right? distribution and administrative. Now, if you look at the 200 square meters that is being used as a warehouse, do you think that warehouse, the physical warehouse itself, is part of your admin function or part of your distribution function? If you can just type me admin or distribution. Thank you, Annalisa. Thank you, Kosar, Gloria, Glody, Leanda, everybody, Luzuku, thank you. You're all correct. Okay, so that will be part of the distribution function. So clearly 200 out of the total 340 square meters, that gives us a ratio. So we are going to, the relevant expenses that need to be allocated to distribution that is part of that building will be in the ratio for distribution of 200 over 340 square meters multiplied by whatever expense we are going to be calculating. Okay, I know this is a process of elimination. I really don't need to ask it, but I'm going to just ask it anyhow. The next one, they say 140 square meters used as offices. So would that be part of your distribution function or part of your admin function, administrative function? Admin, thank you, Kosa. Thank you, Luzuku. Thank you, Gloria. Everyone, that will be part of your admin. So the same applies. If there are any costs, any expenses that are relevant to your admin function, they are using 140 of this 340 square meters. So that again provides us with a little formula. Then if we go to the fourth paragraph, they say the equipment consists of items in the dispatch area and office equipment. So some that has to do with our distribution function and some that has to do with our administrative function. And then they tell us the office equipment accounts for 40% of the depreciation of equipment, and the balance, the other 60% relates to depreciation of equipment used in the dispatch area. Ladies and gentlemen, I'm just going to ask you a little trick question here. Would you need a journal entry for that? Yes or no? Are you going to change anything in your books? Correct, Mr. Chanchani. It says office, so it's admin. Campus Gorilla, spot on. You don't need to make any adjustments, right? You're simply going to allocate it for the purpose of disclosing it on the face of your statement of comprehensive income. Great, great. Okay, then paragraph 5, they say included in the 1,212,000 rands for salaries and wages. See the trial balance above? Okay, let's follow the instruction. There we see it. Salaries and wages, 1,212,000. So included in there, what do they say? Is a salary of 30,000 rands, which was paid in advance. Oof. Right, is a salary, so it's included in there, but it was paid in advance. So included in that amount, 30,000 rand salary that was paid in advance. Now, ladies and gentlemen, I ask you that question. If it was paid in advance, if you think about the accrual system, should that 30,000 rands expense be recognized in this year? Yes or no? Most of you, 99% of you say no, and you are correct, right? Because it doesn't relate. It didn't occur. Remember, Mrs. Moore and Mr. Bormans used that word last week. It didn't occur this year. Therefore, we are not going to recognize it as an expense in this financial year, which means we have to go and exclude it. We'll have to do a little journal entry for that one. I saw a hand up there, but it disappeared now. Who was it? Can you just raise your hand again? I think the surname was Loby. You wanted to ask something?
Mr. Van Rensburg, Gloria asked, you must please explain point 4 again.
Point 4, okay, Gloria. Oh, I see now. There we go. Point 4, what was point 4? This one. They say the equipment, we are going to have to look at that in any case very soon, Gloria. They say the equipment consists of items, thank you, Mr. Borman. The equipment consists of items used in the dispatch area and office equipment. So if they use the equipment in the dispatch area, it has to do with your distribution function, right? The dispatch area, in actual fact, you learn this in internal auditing later on this year. The dispatch area is a designated part of your warehouse. The actual warehouse of most companies consists of 3 sections, a huge section, 90% of the area where you simply store your inventory or you store something. But then you've got a dispatch area. That is where it undergoes certain controls, where a customer has purchased it, purchased some of those items, and you are now either going to deliver it to the customer or the customer is going to come and fetch it from you, right? So clearly, if that dispatch area has to do with when the customers are going to be receiving or taking custody of the goods, that means it is part of your distribution function. Just just for completeness sake, the other small part of a warehouse generally is what we refer to as the receiving bay, where also certain controls have to be applied, but that is when you receive the goods from your suppliers, right? Then it comes into the receiving bay, your staff count it, they make sure that you don't receive broken goods or insufficient quantities or the wrong kinds of stuff before they transfer it into the main part of the warehouse. The dispatch area, similar kind of controls to make sure that only the goods being ordered by the customer is actually going to leave the premises. Okay. Anyway, that doesn't answer your question yet, Gloria. So what they are saying there is the office equipment accounts for 40% of the depreciation. So we'll have to look at our total depreciation of equipment. We'll do that later, don't worry. We are going to do that. We're going to look at our total depreciation on equipment, and then clearly we'll have to say 40% of that equipment or the depreciation of that equipment relates to office equipment, right? To office equipment. In other words, we'll have to allocate that to the administrative function. And then the remainder or the balance, the other 60%, relates to depreciation of equipment used in the dispatch area. Now, as we know, the dispatch area has to do with your distribution, right? Has to do with your distribution. So we just, that paragraph is simply there to give you an indication how the accountant and the financial director, how they have predetermined how to allocate your expenses to certain cost functions. But we are going to do that soon. Okay, so where were we? Okay, so we said that 30,000 should not be recognized as an expense this year. And then they go on, they say the salary and wages expense for 2016 must be split in the ratio of 3:2 between the dispatch and the administration department, right? So when we take that expense, the salaries and wages expense, we have to allocate it in that ratio, 3:2. In other words, 3/5 to the dispatch department and 2/5 to the administration department, right? So that we can consolidate those hundreds of expenses into simply 2 or 3 or maybe 4 cost functions, right? Then in paragraph 6, they say packaging for purposes of safe transport relate purely to the dispatch area. So all your packaging expenses will be allocated to the distribution function, right? And there they say in paragraph 7, the telephone and electricity expenses were apportioned as follows. Certain amount of telephone expenses to the dispatch area, certain amount to the administration function, electricity also certain amount to dispatch, certain amount to administration, right? Paragraph 8, they tell us the tax expense for the financial year ended 28th of February 2016 has been correctly calculated at 302,000. That is a figure we need for the face of our statement of comprehensive income. Paragraph 9, they say there is no other movement in other comprehensive income during the year other than that which is evident from the information above. Okay, time for a little pause and to test you again. They say no other movement in other comprehensive income during the year other than that which is evident from the information provided. So which other comprehensive income is evident from the information provided? If you type for me, you can even use abbreviations there. What is the one that is evident from the other information? Tricky one, this. You must have followed all last week's and the week before's classes very thoroughly. Who wants to venture a guess? There is one that is very evident. The increase in the revaluation reserve. Remember, we have increased the value of our buildings, which is part of our property, plant and equipment, right? We've increased that, but we haven't sold those buildings yet. This is the crucial thing to remember here, ladies and gentlemen. Remember, we have increased the value of the buildings to 7.5 million, but we haven't sold the buildings. So we haven't realized that increase, so therefore we cannot show it as part of our profit or loss because we haven't made the profit yet. But we can. There we go. Thank you, M.R. Chanchani. Thank you, and I think that might be Gloria, in fact. So we haven't realized it, so we cannot recognize it in our profit or loss. But if we are going to increase the debit side, the value of the asset, we obviously have to increase we have to credit something as well, and that will then be the revaluation reserve, right, that we are going to credit, or revaluation surplus, they often refer to it, right? Quite correct. Okay, and then just lastly, they say an ordinary dividend of 5 cents per share was declared on the 28th of February 2016. Again, we're going to do share capital in detail next term, but this is a very simple little calculation, so nothing prevents us from calculating that as well. Okay, so those are all the additional information that we need. So now we can go to what is required of us, and we've already seen that one of the first is to provide additional journal entries, and they even guide us here. They say for which paragraph, so 2, 5, 8, and 10. So let's go and do that, ladies and gentlemen. So in paragraph 2, what do we need there? Let's maybe just briefly read it again, and then you can give me the journal entries. They say the buildings are used, etc., and they say it has been revalued to a fair value of 7.5 million. Now, we've discussed that in depth already. So this represented an increase of 780,000 rands over the previous carrying amount. Okay, ladies and gentlemen, so which account are we going to debit? Please, if you can type for me, which account are we going to debit? Obviously, we will be using one of the accounts that already exists in our trial balance. So which account that already exists in our trial balance will be the appropriate one to debit? I don't want to go and display it now. That's too easy. Okay, you don't have to shout at me. Sipisana, I'm pulling your leg. Okay, I got that right. Buildings. Piwe also, thank you. I think that's the one that had the hand up earlier. Kortar, exactly, assets. In this case, like you say, specifically buildings, but that is not the full name of the account, though. What is the full name of the account? Let's go and have a look. Now I'll scroll up. What is the full name of that account? Buildings, at valuation, right? Buildings, at valuation, right? So that is the account that we will have to go and debit. Now, ladies and gentlemen, let me scroll away from that again. What will be the appropriate account to go and credit? We've mentioned it briefly just now, but please just type it for me. What will be the appropriate one to go and credit? Remember, we can't recognize it in profit or loss yet, so it's not profit, but what account are we going to credit? Which one? Thank you, Korsar. Very close, but I would give you that. Thank you, Leonardo. Revaluation. But again, ladies and gentlemen, remember, when we are doing our journal entries, right? When we are creating a journal entry, we must make sure that we use the name of the account as it appears in our general ledger, right? There we go, Ayesha. Ayesha, I think she's got it spot on there. So what is the name that appears in our general ledger? It'll be the same name that we find in our trial balance. And what is the name of that account? Revaluation surplus, right? So remember, unless we have to create a completely new account that doesn't exist yet, unless we have to do that, it means we have to use the existing accounts, right? So those are the existing accounts. We'll see a little bit later, we might have to go and create an account that doesn't appear here yet, but then we'll give it a different name. But if we are using an account that already appears in our trial balance, then we use that same account name. Okay, now I'm nitpicking, but it is true. When you are practicing as an accountant, that is very important. Right. Okay, so let's go to our first journal entry. Let's see if we are indeed correct. There we go. So we are debiting. We are debiting building at valuation. That is the name of the account with that 780,000 rands, which we are increasing the carrying amount with, and we are crediting revaluation surplus with 780,000 rands. Okay, ladies and gentlemen, our first journal entry done and dusted. Now again, they've given us a few hints here where we need the journal entry, so let's go and do them. So the next one we have to look at is paragraph 5. Let's just double check. Paragraph 3, no journal entry. Paragraph 4, no journal entry. Paragraph 5, yes, we need a journal entry there. Okay, ladies and gentlemen, let's now think. So as it stands, in our trial balance, we've got a figure for salaries and wages of 1,212,000 rands, right? But 30,000 rands of that relates to next year. So one of our staff members have said, listen, I need some of my salary that I'm only going to earn after the year that I'm going to earn next year. I need it now because I've got medical costs. I've got to pay some fees for my student for my son or daughter at university. I need an advance on my salary. So I'm only going to earn it after the year end, but the company pays it for us now, right? So the company has credited their bank account when they make the payment, and they have debited the salaries and wages account, right? So that 30,000 rands is already in salaries and wages. So the first question I'm going to ask you about this, should we take it out of salaries and wages, or should we add that to salaries and wages expense now? Just type for me, please, add or take out. Thank you, Korsar. You are very, very quick on the trigger there. Thank you, Emar Chanchani. Thank you, Akona. Sangibawu. So yes, we've got to take it out. It's already in there. So now we've got to remove it from it, right? Because that like Mrs. Moore and Mr. Borman said last week, that hasn't taken place. The earning of that salary hasn't taken place yet, right? So it's an amount paid in advance. Okay, my next question, ladies and gentlemen, salaries and wages expense, right? It's an expense. Salaries and wages expense, as it stands, does it have a debit or a credit balance? Again, I'm not going to scroll up because that gives it away. You should know this from your fingertips. Debit. Thank you all. Thank you, Campus Grilla, Korsar, Sipi Sunday, Yamkela, Mrs. Colleen Moore, Chloe. Yes, it has a debit, right? So if we now need to take it out, thank you, Ndepiwe. So now if we have to take it out of that amount, do we have to credit the salaries and wages, or do we have to debit it now? Now we have to credit it. Thank you, Korsar, Yamkela, Gloria, Emma Chanchani, Ndempiwe, Letso, right? Thank you. So now we've got to credit it to take it out. So we know that already. Thank you, Glody. So now we must go and have a look. Do we have an account already that we can debit in our trial balance? Let's go and have a look at under our current assets. Under our current assets, where are they? There they are. We've only got inventory, bank, and accounts payable. So we haven't got such an account yet, which means, ladies and gentlemen, in this case, we have to go and create a new account. So give me a name there. You know this from Financial Accounting 1. I'm not going to be too pedantic about the exact name. There you go. There you go. Thank you, Leonardo. Thank you, Sippy Sunday. So an appropriate account will be prepaid expense or expenses paid in advance. Or if you only got this one, you might even call it, like Leonardo said, prepaid salaries, right? But the fact is, like Lodi also said there, it's going to be a prepaid expense. Okay, good stuff. You are sharp. I'm impressed. So let's go and have a look at our journal entry, and you obviously know it's 30,000 rands that we must go and take out. So let's scroll down to our journal entry there. There we've got it. So we're going to debit expenses paid in advance, like you said, there with a 30,000 rands, and we're going to credit the salaries and wages in order to take it out of the out of that figure, right? So that's not part of our expense for the year. Then the other paragraph that they refer us to is paragraph 8, but we can maybe just scroll through or scan through the other paragraphs. We already said that one doesn't involve a journal entry. This doesn't involve a journal entry, but that one does, right? So that has not been accounted for yet. How do I know that it's not accounted for yet, ladies and gentlemen? How do I know that that has not been accounted for yet? Two ways in which you can say that. First of all, they require of us to do a journal for paragraph 8, right? But the second way that you could have done is you could have had a look here amongst your expenses. Is there an income tax expense? Yes or no? Is there an income tax expense amongst your expenses? Oops, sorry. Nope, no, there isn't one yet, right? And it's very unlikely if a company makes a profit. It's not impossible, but it's very unlikely that if a company made a profit that they will not have a tax expense, right? So thank you all for that. So clearly that has not been recorded yet. Okay, so how are we going to record that, ladies and gentlemen? Let's just go to that paragraph. Number 8, the tax expense. Let's make that income tax expense, just to be very clear. So the income tax expense has been correctly calculated at 302,000 rands. Now, please provide for me an account that we should debit. Remember, expenses are debited, and this expense is accrued, right? This expense is accrued. We haven't paid it yet. We are just accruing it. In other words, we are recognizing it in this year as an expense, right? So when we do an accrual like that, obviously there will be an expense, right? We debit the expense or credit the expense. You can type that for me quickly. Debit or credit the expense? Debit. Thank you, Kosa. Thank you, Campus Grilla, Yamkela, Mbini. So we're going to debit that. And at the same time, we are going to raise it. Thank you, Glody and Luzuku. At the same time, we're going to raise a liability. And clearly the liability will be credited. Okay, so give me a good name, ladies and gentlemen, for the account that you are going to debit. What would you call that account? In fact, it is there in front of you in its entirety. So you don't need to use too much imagination. What would you call? There we go. Kosa, Ronaldo, exactly. Income tax expense, right? And ladies and gentlemen, we hammer the fact that you must use the word expense here, because as we'll see a little bit later, we've also got something called current tax payable. And a payable is not the same thing as an expense. An expense is an expense. Right? A payable is a liability. And in the last term of the year, when we do the statement of cash flows, we see we even got a different item, which is called income tax paid. And income tax paid is not the same animal as income tax expense, because income tax expense, as you know, has been accrued, whereas your income tax paid, that represents amounts you've actually paid over to the relevant revenue services. Okay, and what is the account that we are going to credit, ladies and gentlemen? I've given you a little bit of a hint there. We are going to call it, I know you've only encountered this maybe once or twice last week, so let's see if you remember. What? Quite close, Korsar. Quite close. We are going to give it a specific name. This is why I know that you might not have completely encountered the name yet. We are going to call it current tax payable. Current tax payable. Now, why are we calling it current tax payable? Because as we've seen a little bit earlier, we also get something we call deferred tax. Even though we're only going to encounter deferred tax in our third year in Financial Accounting 3. But current tax distinguishes it from the deferred tax, right? And the payable clearly means it's a liability. So we're going to call it current tax payable, : dot dot. And then we are going to indicate the type of tax, because we may owe amounts to the revenue service with regards to value added tax, or we may owe amounts to the revenue service with regards to employees tax, and we may owe amounts to the revenue service with regards to income tax. So we're going to specify them, because as we'll see later on, we're going to disclose each of them separately, right? Our second topic of the second term, next term, will be taxation matters, right? Then we are going to look at dividends tax, we're going to look at income tax and so forth, and we'll see that for each of them, we are going to disclose it separately. Mr. Borman already did a class last week about offsetting. You remember when he spoke about offsetting? We said we are not allowed to offset various kinds of taxes amongst our liabilities and our assets, right? So that is the offsetting question, right? So each of them will be disclosed separately. Anyway, okay, long story short, let's go and have a look at our journal entry. So let me scroll down. So there we have it. We're going to debit income tax expense. They've already said the amount has been correctly calculated, 302,000. We've got current tax payable as a credit, so we're going to raise the liability. Remember, we are accruing the expense. So when we recognize the expense, at the same time we are accruing or raising the liability, and we call that current tax payable, : income tax has been correctly calculated as 302,000. Okay, ladies and gentlemen, so far so good. There's one further paragraph that requires a journal entry of us. They give us a hint there, that is paragraph 10. Let's just see about paragraph 9. There we can see it's just information about the other comprehensive income. It doesn't require a journal. So every journal that we have been required to do has actually been mentioned there. Okay. So here they say an ordinary dividend of 5 cents per share was declared on the 28th of February 2016. Now, ladies and gentlemen, like I said, we are only going to look at share capital, which includes dividends, in detail next year, but this is not rocket science. Just a few very simple questions I can ask you, and you can give me those straightforward answers. We'll see next term that you get ordinary dividends and you also get preference dividends. But this is an ordinary dividend. The way they are calculated between a preference dividend and an ordinary dividend is slightly different. But here we can get a hint, ladies and gentlemen. If they say an ordinary dividend of 5 cents per share, that is the important little phrase there. An ordinary dividend of 5 cents per share was declared. Now, what would that be based on? If you can type for me in the, just one word, in the chat facility there, would that be based on the number of shares in issue, or the value of the shares in issue? Thank you, Kosa. You are really sharp. Emma Chanchani, this time you've got a little bit of a hiccup. Campus Griller has got it correct. The student that only logged on with the student number has got it correct. Konzeka's got it correct. So if they say X cents or X rands per share, it means it is based on the number of shares, right? We'll see next term when it comes to preference shares, then it is a certain percentage of the value. But here they've given us the detail 5 cents per share. So that means we first of all got to go and see how many shares were in issue. In other words, were issued to shareholders on the 28th of February 2016. So let's go and have a look if we can find that information. There we can see when it in the trial balance, they say trial balance at the 28th of February 2016, ordinary share capital had a value of 5 million rands, but they say how many shares were in issue, the number of shares, 500,000 shares, right? 500,000 shares. So 500,000 shares multiplied by, what did we just say, 5 cents, I think, 5 cents per share. What does that give us? You can type for us in the chat box there. Oh, I mustn't go down to the journal entry yet. Yes, I think it is 200. Is it? No, no, it can't be 250. Let me just double check. 500,000 times 0.05. 25,000, right? So it's 25,000 rands. So most of you have it correct. One or two of you have got an additional zero there. Remember, if it's 5 cents, it's 0,05, right? Not 0,5. 500,000 multiplied by 0,05. It's only 5 cents, not 50 cents, right? Okay, ladies and gents, let's maybe just, I know that you haven't done this yet, but let us do it now, because you will be required to do this in your formal test, the upcoming formal test. What would be the appropriate account to debit here? I know this is slightly more difficult because this is not an expense. It's not an actual expense. It is a distribution of your retained earnings to your shareholders, right? So which account will you debit? Maybe I'll give you the answer here. It's going to be ordinary dividends, right? Some companies will have an account called ordinary dividends declared. Some just call it ordinary dividends, right? But you have to distinguish that from the preference dividends, right? So we're going to debit an account called ordinary dividends, or ordinary dividends declared with that 25,000. And then again, ladies and gentlemen, this is an accrual. So as soon as we accrue that distribution of the retained earnings, which we call a dividend, we must also raise a liability. Now, who do we owe that money to? If you can type for me in the chat box. This is also a trick question, but I'm pretty sure most of you are going to get this. Not shares, because we are not issuing new shares. We're not issuing new. Yes, Chanchani, holders of what? There, Kosa has got it right. Also the student after that, the shareholders. Calypso, I like your answer the best. Remember, we might have ordinary and preference shareholders. So Calypso has got it spot on. Most of you have got it correct, that it's going to be the shareholders, but it's very specifically your ordinary shareholders. Okay. So let's go and have a look and confirm whether our entry is correct. So if we scroll down to our journal entries, there we've got it. They are debiting ordinary dividends. We've calculated the amount at 25,000 rands, and we've raised a liability because this is still an accrual. We haven't paid them the dividends yet. We must still do that after the year end. So at the end, we are going to owe them the money. So we raise that liability, right? This is an accrual, this whole entry. So we recognize the distribution and we raise the liability of 25,000. And there we've also got the answer there. Oops. So that was 500,000 shares at 5 cents per share. Okay, ladies and gentlemen, let us now pause for a minute or so there. Let's just see if there are any questions from your side with regards to the journal entries. If you want to ask it in question, you are more than welcome. Or you can type it in the chat box, but I'm pretty sure if you had a question in the chat or for the chat box, you would have typed it already. Okay, so no question in person. Okay, ladies and gents, that brings us to the next major step. This is also something that is new to you, because as you've typed earlier, we've got the nature function when we draw up the statement of comprehensive income, and we've got the function method, not the nature function, the nature method, and we've got the function method. So we have been presented with a trial balance that still contain all our expenses according to their nature, but we want to draw up a statement of comprehensive income on the function method, Right, let me just see. Hima Chanchani, why is it that if we know this question, we are 2 steps up in being professional accountants? The reason I said that, maybe I can just tell you that it is because this question, you are learning a lot of new things, right? You have now learned what a company is as a start, right? What is a company? You have now learned what are shares. You are now drawing up the financial statements, everything except for the statement of cash flows, right? The statement of cash flows, which we are doing at the end of the year. So here you have to draw up the statement of comprehensive income for a company according to the function method. So now you've learned a whole new thing. Okay, you have to draw up the statement of changes in equity. You have to draw up the statement of financial position. You have to draw up some of the notes. We said the statement of compliance note, basis of preparation as part of your accounting policies. There are a few other notes that we may want to draw up. So what I'm saying there, if you understand this, you are basically able to draw up a full set of financial statements, except that we haven't done the cash flow statement yet. And obviously we are going to do very specific things. We are still going to do things like property, plant and equipment in the third term. We are still going to do share capital next term. We're still going to do taxation matters next term, right? So that creates new notes and new disclosures and new calculations and new valuations, right? So then we'll see next term there's an income tax expense note. We'll see there are various share capital notes, right? In the third term, we'll see we'll talk more about the note regarding property, plant and equipment. So what I meant by that, tongue-in-cheek, I have to admit, I just meant that you are going to be learning so much about drawing up financial statements during doing this question, that you're not only going to take one step up the ladder, you're somehow going to take 2 steps. Okay. Galetsa asked transaction 8. How did you know it was income tax expense? Because it was not indicated. Yes, it was. So I'm going to show you just now. It indicates exactly that. There they say, Galetsa, the income tax expense. They use the exact term there. The income tax expense for the financial year ended 28th of February 2016 was 302,000. Galetsa, you got that? So how did I know it was income tax expense? Because that is exactly what is indicated there. Happy? Oh, no, Galetsa, no, I just changed the name slightly. It wasn't incorrect. The number 8 originally said the tax expense, right? The tax expense. So it already indicated tax expense. I only typed in income tax because that is the specific type of income tax. You know, companies are involved with many kinds of taxes, even though only income tax is an expense for the company. Value-added tax isn't, employees tax isn't, and so forth. Dividends tax isn't. So it's only the income tax. I was being nitpicky. Okay, I was just indicating it's the income tax expense. Got that? Let's say it already indicated tax expense. So I just added the word income so that you know it's the income tax expense. Got it, Kalitsa? Got it. Thank you. Okay. Right, ladies and gents. So now we've got to go and allocate the expenses. Right. So we'll have to do this in two kinds of steps. So we'll have to make sure that all of our expenses have been allocated to cost functions, right? So we must make sure that each and every one of those expenses have been allocated, but we must also use this information to go and do the allocation, because what normally happens is the chief accountant and some of the other accounting personnel and perhaps the financial director of this company or the chief financial officer of this company, they would have had a meeting right at the start when this company was founded. And they would have determined in a meeting, they would have determined what would be the most logical way in presenting the various functions. So they would first of all have decided these are the two main functions of the company when it comes to expenses. And then they would have said, how are we going to allocate our hundreds of expenses to just 2 or 3 or 4 or 5 cost functions, right? Okay, so now let's go and have a look what they are supplying us with here. Let's maybe just have a look at the expenses. Let's take them from the top. So here starts our nominal accounts, right? So there we've got sales, we've got services rendered, then we've got cost of sales. Now, cost of sales, as we've said last week, that is a cost function on its own, right? That is already a cost function on its own. As you know, that includes your opening inventory, it includes your purchases for the year, it includes your carriage inwards, it includes, it deducts your closing inventory at the year. If there have been any inventory losses or write-downs of inventory, it would include that, right? So your cost of sales is already a cost function. So let us go to the next ones there. So that is already a cost function. Perhaps we can even let's start drawing up the statement of comprehensive income later on. But you know that cost of sales, that cost function is a disclosable item that is going to be on the face of our statement of comprehensive income. So later on, when we are going to draw it up, we're going to use that figure. So now let's go and have a look at this. They say depreciation on buildings and depreciation on equipment and so forth. So let's maybe just start with the depreciation on buildings, right? The depreciation on buildings, we see that is a total amount of 340,000. So we must now go and draw up a little allocation table for ourselves. This is what the allocation table looks like. Right, so we've drawn up a table. We say we are going to allocate expenses, the various expenses according to their nature as presented to us, to certain cost functions, right? A distribution cost function and an administrative cost function. Okay, so now we see that the depreciation on the building, we take this directly from the total, directly from our trial balance. But ladies and gentlemen, there is a but to this. Before we can figure out whether that is the figure, what other source of information must we refer to before we actually say that is the amount that we must allocate? What other source of information? If you can type for me there. I've mentioned this almost right at the journal entries. Oh, sorry. I hope I didn't burst anybody's eardrums there. Yes, thank you, Corsa. The journal entries. Right. We must also refer and have a look at the journal entries. So in the case of the depreciation on buildings, did we make any adjustment? Did we debit or credit the depreciation on building? Thank you, Emma Chanchani. Did we debit or credit depreciation in our journal entries, the ones that we've done today, not before we drew up the trial balance, which we've done now? Thank you. You have corrected yourself there. Thank you, Kosa. Thank you, Campus Griller. Emma Chanchani, no, we haven't. Let's maybe just go and have a look at our journal entries again. If we look at our journal entries, did we debit or credit depreciation anywhere? Those are our journal entries. Nope, 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 nope. Right, so we haven't debited or credited our depreciation expense. Right, so the depreciation expense that they give us there, which was 340,000, that is the amount that we have to go and allocate to the various cost functions. Now, how are we going to allocate it? That is the question. How are we going to allocate? So now we have to go and refer to the information that they've provided us here, which has been predetermined many, many moons ago by the financial top structure of this company. Right. And there they've said, oops, still up. Where was it? There. There in paragraph 3, they say the building. Remember, we are now talking about depreciation on the building. They say the building has a total area of 340 square meters. And then they tell us 200 square meters is used as the warehouse and 140 square meters is used as offices. Right. So now let's go and look at how we allocate that. We already said a little bit earlier, that will provide us with a ratio, right? So in the case of the distribution cost, that warehouse of ours was how many square meters? 200 square meters, right? So we're going to take that 340,000, we multiply it by this little factor. This factor, 200 square meters, that is used by the warehouse, which is part of our distribution function, over the total square meterage of that whole building, which is 340 square meters, right? So 200 square meters over 340 square meters, that is the portion that we of the expense that we are going to allocate to distribution cost, right? So if we take 200 over 340 multiplied by the total 340,000 rands expense, then we can see that 200,000 rands of that 340,000 is going to be allocated to the distribution cost, and 140,000 is going to be allocated to the administration cost. How do we calculate that? That is the 140 square meters over 340 square meters multiplied by the total expense that we want to go and allocate to the cost functions. Okay, so that is our first kind of expense allocated, right? Perhaps we can just pause there for a brief while, because this principle of allocation is very important for us to understand. Have you got any questions on that? You can do that in person if you wish, or you can type it in the chat box. Once again, I guess if you wanted to ask in the chat box, you would have done that by now. So is there anyone want to ask any question on the principle of the allocation or the particulars of this allocation? All happy. Okay, so now let's go back to our trial balance. Like I say, normally I would go through the trial balance sequence to make sure that I haven't missed out on any expense. Okay, so let us go back to our trial balance. Let us see what is the next expense. So that we said is a cost function on its own. That one we have now allocated. So the next expense we have to allocate is depreciation on equipment, right? Depreciation on equipment, the amount that we must allocate is 150,000 rands. So let us just start off by making sure we haven't made any adjustment, right? So again, we need to go and scrutinize our journals. Remember, ladies and gentlemen, this is important because the journals would have caused a change in those balances in your trial balance. So again, did we debit or credit that depreciation anywhere? Nope, nope, nope. So in this case, no adjustment was made to it. Okay, so we can now simply go and say depreciation. This is our description of the nature of that expense. Depreciation equipment was 150,000 rands. Okay, now we've got to go and determine how did our financial management structure many years ago, how did they determine how we should allocate the depreciation on equipment? So now we'll have to go and look at the usage of the equipment. Look, in the first one, where it was the depreciation on the building, we looked at the usage of the building and we saw that 200 square meters is used by the warehouse, which is part of our distribution function, right? And 140 square meters of that total 340 square meters is used by the office people, right? Which is part of our function. So similar principle. Now we must going to look at the equipment. How is it being used? In which function is the equipment being used? Because that is where the depreciation expense need to be allocated to, right? So let's go and look at our additional information here. Here in paragraph 4, that gives us details about equipment. So they say the equipment consists of items used in the dispatch area and some office equipment. The office equipment accounts for 40% of the depreciation of equipment. That is, in other words, part of our administrative function, and the balance, which is 60%, relates to the dispatch area. We know that is part of our warehouse, so that has to do with our dealings and wheelings with our customers. So that will be part of our distribution function, right? So we've already got the amount of 150. 40% we see should go to admin, and the rest to distribution, right? So that is exactly what we do. We say 40% is going to be allocated to our administration function. So we take 40%. 40 is our, what does per cent mean? How many cents are there in a rand? Okay, 100 cents in a rand. So per cent means there it is out of 100, right? So 40 divided by 100, 40%, in other words, of the 150,000. What does that give us? 60,000, right? So we allocate that to the column where we are now accumulating all our administration costs, right? And then they say, as I said, that the remainder or the balance, in other words, 60% of the equipment is used in the distribution function, right? So we're going to take 60% of the 150,000 multiplied out. That gives us 90,000 rands. We add that to the column where we are accumulating all our distribution costs. Let me just go to the chat box. I heard something there. Oh, nothing new there. Okay. Right, ladies and gentlemen. So now let's go to the next expense on our trial balance. So let's go to the next one. So we've had depreciation. We've got depreciation on equipment. The first one on buildings, the second one on equipment. Now we've got salaries and wages, ladies and gentlemen. Right. So we see our salaries and wages. The balance on the trial balance is 1,212,000 rands. But now, again, like we said with the other two, we might have made an adjustment to that. So we cannot only refer to our trial balance, because this is basically what you know from Financial Accounting 1 as a pre-adjustment trial balance. But now we have made some adjustments. So our post-adjustment trial balance will be slightly different. Okay, so let's see in this case, did we make any adjustment? I don't even have to go to it. Go to the journals, but I will. But I just want to ask you first, did we make an adjustment to our salaries and wages? Yes or no? Did we make adjustments? Yes, contact. Oh, there we go. Oh, all of you, Fatima. Oh, too many to mention. Thank you all. I'm so glad that I haven't bored you to sleep yet. Okay, so we have made an adjustment, ladies and gentlemen. So now we must obviously take cognizance of that adjustment. So we've got a debit balance of 1,212,000. If we go all the way down to our journal entries, we see there we have credited it with 30,000 rand. So what do we need to allocate? What is in our post-adjustment trial balance? What is the amount now? It is 1212 minus 30,000. So that looks like it's 1182,000. Do you all agree with that? Maybe you can just say yes or no for me, just in case I made a mistake, but I've already gone to my table, so I haven't made a mistake. Right, so you take the 1212. Thank you, Ahmed. Thank you, Siwam Kele. Okay, so we've taken the 1,1212, so it's 1,212,000 rand. We've deducted the 30,000 rands because that 30,000 rands does not relate to this year's expense. It's a prepaid expense. So the amount that remains, the amount that is going to end up in our statement of comprehensive income in total will be 1,182,000. Right. But now again, we've got to allocate it to the functions, to the distribution function and to the administration function. So here we've got to go and see how were the salaries and wages earned between the workers in the one function as opposed to the workers in the other function. So let us go up again to our additional information. Let's see what they tell us about the salaries and wages. So here we've got a paragraph that deals with that. We've already excluded the 30,000 rand, so we have taken that out. Now we've got to concentrate on the last part, the last sentence of that paragraph. So they are saying the salary and wages expense for 2016 must be split in the ratio of 3 to 2. Ratio of 3 to 2 between the dispatch and the administration department. Now, you all know from mathematics, it's a ratio of 3.2. Your total ratio, that was the total amount or number that you'll have below the line as a denominator will be 5. So you simply add the 2 up. 3 plus 2 is 5. So in the case of the dispatch department, they will get 3/5. 3/5 of that salaries and wages expense, and the administration department will get 2/5. You're all clear on that? Okay, so let's go and allocate that, ladies and gentlemen. There we've got the amount. The amount that we need to allocate is 1,182,000, and we have seen that 3/5 must go to the distribution. Let me just double check that. Is the distribution the larger one? Yeah, the dispatch, which is part of your warehouse, which forms part of your distribution function. That's the larger one. So 3/5. So 3/5 of that 1,182,000 will be allocated to your distribution cost. So you do that little calculation, you add that to the column where you are accumulating all your various distribution costs. And then for the administration costs, for your office workers, those people that are not working in the warehouse, that are not delivering your merchandise to your customers, they are simply there as administrative personnel. 2/5 of your total salaries and wages bill are being paid to those people. So you take your little ratio, 2/5 multiplied by the amount that you are allocating of 1,182,000. That gives you the 472,800. Okay, ladies and gentlemen, so far so good. So now let's go and have a look at our next expense. The reason, like I said earlier, why I do it this way, where I do it in the sequence of the trial balance, if there is anything that you find that there's an expense here that has not been allocated and it is allowed to be allocated, and then if there is no information here about how to allocate it, it means you must still go and allocate it, and then you may have to find an appropriate way to do that, right? I don't think there are any in this question, but I'm just saying you must make sure that you haven't left out any question, any expense, I should say, sorry. Okay, so salaries and wages, done and dusted. So let's go to the next expense. So the next expense is the operating lease on delivery vehicle, right? Now that maybe this is a good example. Ladies and gents, I know that they tell us something about the operating lease of the delivery vehicle in the additional information. They tell us, okay? But let's say, for instance, there was no information in the additional information. They didn't tell us anything about the operating lease on that delivery vehicle, right? So let's say they didn't provide us any additional information. We are simply picking that expense up here from the trial balance, right? In that case, to which function would you have allocated the operating lease expense? If you can type for me there, please. Gosar says admin, Campus Griller says distribution. The student who only signed in with the with his or her number says distribution. Sipi Sunday, Annalisa, Konzeka, Sangabawu, all says dispatch. Leonardo, okay, the dispatch is correct, ladies and gentlemen. They didn't even have to tell us anything. Why? Because it is delivery vehicles. If it was, for instance, the director's motor vehicles or some sort of vehicle used in administrative purposes, then you would have allocated it to admin. But here they say operating lease of delivery vehicle, right? So if it's a delivery vehicle, clearly that vehicle is used in your distribution function. Okay, but they have told us here somewhere, where was it? Oh no, sorry, I'm thinking of the packaging. So that is a brilliant example in the end. That is one where they haven't told us, right? So that is in fact one expense that they've told us nothing about. So there we have actually an example in this question where you have to go and decide whether they've given you no further information to which function that cost should be allocated to, right? So 20,000 rands, perhaps we can just ask the question that we are complete. Have we made any adjustments to that figure in our journal entries? Have we made any adjustments to the operating lease? We can quickly scrutinize it. Nope, 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 nope. And I also get the answers there from Annalisa and Konzeka. Okay, let's say no. So no adjustments made to it. So we can simply go to, or we can simply use the figure. I think it was 20,000. Let me just double check. Operating lease 20,000, and we're going to allocate that whole 20,000 to distribution. So there we've got it. Our description of the expense by nature. It's an operating lease on vehicle. The total amount 20,000. We know that delivery vehicle is only used in the distribution function, so the whole 20,000 rands we are going to allocate to distribution cost, and none, let me maybe type in there a little dash, nothing, no amount will be allocated to administration cost. Okay, so there we had such an example. So now let's go to our next cost, next expense, ladies and gentlemen. So that was the operating lease. The next one, packaging for purposes of safe transport. Packaging for purposes of safe transport. So that is the one where they do give us some information, right? But even if they did not provide us with any information, the chances that that packaging has to do with our inventory, our merchandise that we are delivering to the customers, is virtually 100%, right? So even if they haven't told us any additional information, we would have allocated the packaging expense to the which function? There we go. The dispatch area, Leonardo, correct? But that dispatch area is part, like Monga says, and Akona says, and Yamkela and Annalisa, we all say that is part of our distribution function. Okay, but they did tell us here in the additional information, maybe you can just quickly look there again. Packages for purposes of safe transport relate purely to the dispatch area, but even if that paragraph had been omitted, we would still have known that. Right, let us just go and find the amount again. Packaging 40,000 rand. So now we're going to take that figure. If we are doing this on a computer, we'll copy that. We'll just say copy. We'll go and paste it in our allocation table. So packaging for safe transport. There we will paste it, 40,000 rands. And as you know, that only relates to the distribution function, right? It relates to our warehouse, the dispatch area of our warehouse, where they go and package the stuff that we are going to be delivering to our customers so that it doesn't break, that it is safely packaged, securely packaged. So that whole expense will be allocated to the distribution cost. Right, ladies and gentlemen, let's go to the other expenses that we still haven't covered. So where are we? We are there. So now let's go to the telephone expenses. Telephone expenses. So surely they've got some telephones in the dispatch area because they have to communicate with their customers, but they will also have some telephones in the administration part, right? So let's see the amount first, 28,000. So we are going to copy that amount for electricity expenses to our allocation table. So there we have telephone expense, 28,000 rands, right? But now we've got to go and see how they have decided upfront many moons ago how we are going to allocate this. So here in this case, in paragraph 7, they don't provide us with a ratio, they don't provide us with a percentage, they don't make reference to the area being used by each department. They simply say what might have happened in this case, in fact, is that the company may actually get separate telephone accounts for their admin function, and they may get separate telephone accounts for their admin, right? Or they could have done an analysis. If they get one account for the whole company, they could have analyzed it in accordance with a telephone extension. So if that extension belongs to, which is related to a certain cost on that telephone bill, relates to dispatch, they allocate it to dispatch. Or if that specific extension of the phone is being used in the administration department by one of the secretaries, they actually allocate it. So in fact, they've probably allocated it accurately, right, from the accounts. So of that total 28,000, 15,000 is being allocated to the dispatch area, which is part of our distribution department or distribution function, and 13,000 to the administration. That is exactly what happens there. 15,000, scroll up a little bit, 15,000 to the distribution function, so those are the telephones in our dispatch area, and 13,000 to the administration function, so those are the telephones being used by our admin people, admin staff. Okay, so we've got a few more expenses to go and have a look at. So that was the telephone. Now we've got electricity expenses, right? Electricity expenses, 152,000. We can simply copy that. We can simply copy that over to our allocation table. So if we go to our allocation table there, 152,000. Okay, ladies and gentlemen, now we must go and see how they have allocated this. This you may find is similar to the telephone, where they have actually had a look. What is the extent of the electricity being used in your dispatch area? What is the extent of the electricity being used in your administration area? Here they've decided that 90,800, probably from the city of Cape Town or whichever municipality accounts, belong to the dispatch area, which is part of your distribution function, and 61,200 belongs to your administration function. Right, and that is exactly how they went and allocated it to the various cost functions, right? 90,800 to distribution, 61,200 to electricity. Now I'm going to give you a trick question, ladies and gentlemen, just to test your accounting prowess. How much have you actually advanced 2 steps on this ladder to becoming professional accountants, or have you only proceeded 1 step? Let's say, for instance, let me finish the question. It's quite a long question that I'm going to ask, and then you type for me an answer there. If they didn't give you the electricity expense allocation there, right? If they only provided you with the electricity expense 152,000 rands, what do you think? What would be the most appropriate, the most fitting way to go and allocate that electricity expense? Would it be by, let's say, the square meterage used, or will it be how the equipment is being used, or other basis? What would you say would probably be a good idea if they didn't already provide you with an allocation method? Yes, Korsar, spot on. You have gone to the second step already. Okay, maybe when we're done with the question, you guys have advanced 3 steps on that ladder to becoming a professional accountant. So you're already on the second step. I totally agree. A very appropriate method would then also have been the square meterage. It is probably not going to be 100% accurate, but as you know, it's an estimate. So that would be a good estimate. The larger area being used, you may find they use more. They've got more lights. They've got the larger area has got more air cons. The larger area has got more machinery that runs on electricity. So that would probably have been a good basis to use. Okay, so now we've still got 1 remaining, and that is the finance cost, ladies and gentlemen. Finance cost 90,000. Now we already know we've made no adjustments to it. We would have also checked for the telephone expense and the electricity expense, which we haven't done again. But I mean, when you do the question, when you do it in practice, you would have checked whether there were any adjustments in your journal entries. But we know we didn't make any adjustments, so we didn't go and check again. In any case, in the case of the finance cost, if you now think back to the class that Mr. Borman presented last week and the classes that I've made available to the finance cost, are you allowed, just a yes or no answer, are you allowed to allocate that to a cost function in accordance with IAS1? Are you allowed to allocate your finance cost to a specific cost function? Yes or no? Campus Griller, you're the one spot on this time. Konzeka, quite correct. Because it is a, what do we call that kind of item? We gave it a name the other day. Something like finance cost and something like your income tax expense. They are not allowed to be allocated to cost functions because they are what? They are what? They are material. That's a good idea. That is a good idea, Campus Griller. But in this case, we actually gave it a slightly different name. It is what we refer to as a disclosable item. A disclosable item. A disclosable item is an item that is required by IAS1 to be disclosed on the face of your statement of comprehensive income. We've encountered a few of them last week, and in the recordings, Mr. Borman mentioned quite a few last week. Maybe we can go through a little list of them. Disclosable items, as Mrs. Moore says, must be disclosed separately on the face of your statement of comprehensive income. Let's go through a quick list. What is the very first? The first item that is a disclosable item. What are you always going to start your statement of comprehensive income with? If you can type for me there. What is going to be the first item? It's a disclosable item. Mr. Borman also discussed this when he was talking about offsetting. He said you can't offset this with cost of sales, for instance, right? What is that first item that we're always going to start with our statement of comprehensive income? Campus Griller, thank you. Thank you, Corsa. Revenue, right? Revenue. The revenue may be from sales, yes, but the revenue may also be from services rendered, or the revenue may also be from dividend income, or from interest income or royalties income. I think I've just heard something outside. Anyway, so all of those kinds of incomes, we group them together and they form part of our revenue, right? So sales is one of the items, but remember, in financial accounting 1, that was the only revenue that you really encountered, and we haven't properly applied IAS1 in financial accounting yet. So now your sales and your services rendered and your interest income, they will be grouped together as revenue. Thank you, Corsa. And I think there was someone else, Campus Griller. Okay, so revenue is a disclosable item. Cost of sales is a disclosable item. Income tax expense is a disclosable item, and the finance cost, right? So your finance cost and your income tax expense, they are not permitted to be allocated to cost functions, right? So you're not going to allocate them in that allocation table. That is going to be shown on the face of your statement of comprehensive income by virtue of its nature, right? There are various reasons for that. I don't want to go into all of that, but one of the main reasons is that it makes the analysis and interpretation of your financial statements possible. Very often when people are doing ratio analysis and various other kinds of interpretations, they want to exclude finance cost, or they want to exclude let's say the income tax expense, right? And then they can do that very easily because they can see it on the face of their statement of comprehensive income. Okay, ladies and gents, so now we have made sure that we have covered each and every expense, all those that are allowed to be allocated to a cost function. We have the exceptions being the cost of sales, which is already a cost function of its own, and the finance cost, which, as we've said, is not allowed to be allocated to a cost function. We have to show that whole 9,000 rands on the face of our statement of comprehensive income. Okay, so that all that is left for us now, ladies and gentlemen, is to go and add up our columns once we are certain that we haven't omitted, we haven't missed out any expense. Every single expense that can be allocated has been allocated. Remember, this is quite simple. There are only 2 cost functions. There might be 3 or 4. The company might also perhaps have a operations function, or they may have a marketing function. It all depends on the situation in that company. But anyway, this company has distinguished between two functions, right? So now we go and add up our column, right? So we add up this column, and that total will give us the amount that we are going to disclose on the face of our statement of comprehensive income as simply distribution cost. So clearly, that is going to be disclosed on the face of your statement of comprehensive income, that total, as your distribution cost. It includes already all of those expenses. So you cannot go and add them again on the face of your statement of comprehensive income. We shall see later on, it won't be today, next time, we shall see that many of these items, one of you used the term a little bit earlier, many of these items will be seen as material in nature, right? So if they are seen as material in nature, we are still going to disclose them, but not on the face of our statement of comprehensive income. Then we are going to have a note. We have designated a very specific note, which we call our profit before tax note. When we get to that note, I'll also talk about why we call it the profit before tax note, right? But that is a note where we will then go and say depreciation on buildings 340,000. Depreciation equipment, 150,000. Employee benefits expense, we're going to change that description a little bit, and we'll talk about it then. Employee benefits expense, 1,180,000. So there we are going to show those material items by virtue of their nature, but only in the note. Remember what we said? Why are we even doing this? Why are we allocating this to distribution, administration, and marketing and operating functions? It is because this is a large company and it may have 50 or 60 different kinds of expenses, and we cannot simply go and list all of them and then still think we can fit it in on one page, right? And the thing like general expenses, no, please, no. General expenses means nothing to the users of the financial statements. Okay, so sometimes you can't avoid it. In general, rather allocate to then a specific cost function. Okay, ladies and gents, right. So now clearly we are ready to start drawing up our statement of comprehensive income. So let us start with that. We'll probably not be able to finish it. So let me just go back to what is required of us. I'm pretty sure that is going to be the next requirement. So in 5.3, there they say prepare the statement of comprehensive income on the function method. That is why we went to all this trouble of allocating our expenses to specific functions. For the year ended the 28th of February 2016, we know that is our financial year end, the one that we are reporting on now, in compliance with international financial reporting standards. So in this case, we've got to specifically apply International Accounting Standard number 1, which is titled the presentation of financial statements, right? So we have got a specific structure. Actually, over the weekend, I just went to make sure in the recording, which is called IAS class or class on IAS1 part 2. Part 2, there on a whiteboard, I went and wrote, or I went and typed on a whiteboard the structure. So let's maybe start with that structure again. I'm going to ask you almost the same question asked a little bit earlier, but I still want to see whether more students answer this now. So where do you start? What is going to be your first item that first line item that you start with on your statement of comprehensive income? The only who doesn't need to type it again is Corsair and Campus Griller. No, Glody, we said revenue. Zimbini, yes, revenue. Thank you, Monga. Okay, revenue, because we are going to combine for the sake of not cluttering up the statement. Remember, we don't want to clutter it up. We want the users of the financial statements to be able to make an opinion or get a judgment on the performance of this company in one page, right? One view. Okay, so we're going to have revenue. Now, ladies and gentlemen, I've said this in that class where we did this theory as well, but perhaps those of you who haven't made a note yet, hopefully you have made notes there when you looked at that recording. We get revenue from sales, so you can make a note there, revenue from sales. Secondly, revenue from services rendered. Thirdly, revenue from interest income. Fourthly, revenue from dividend income. Fifthly, revenue from royalties income. Right, royalties. Somebody asked a few questions last week about intangible assets. So if you own an intangible asset such as a patent right or the copyrights or whatever kind of intangible asset, you own intellectual property. The revenue that you generate from owning that intellectual property is royalties, royalty income. Okay, so please remember those are the 5. So now we have to go and have a look at our trial balance. Which kinds of revenue do we have? Now we remember the first part, they were all statement of financial position items, and here just below accounts payable started our nominal accounts. So what have we got here? Sales, ladies and gentlemen. So here we have sales. Quick question, yes or no? Is it part of revenue? Yes or no? Yes, thank you, Kosar. Thank you, Yamkele. Yes, it's part of revenue. We've just said thank you, Simamkele. Thank you, Zimbini, Amanda. Akona, thank you. Right, so that is part of revenue. So we are going to include it in revenue. Let's look at the second line item. Services rent. Services rendered. Quick question. Is that part of revenue? Yes or no? Yes, thank you, Akona. Thank you, Kosa. Thank you, Mkela. Ooh, Zimbini, Glody, Leonardo, Amanda, Sisipo, Gonzeka. So quick that, the names have disappeared already up in the chat facility. Right, so it's part of revenue, ladies and gentlemen. They could also now have interest income. They could also have dividend income or royalties income. The fact remains they are all part of revenue, and we do not want to clutter up our statement of comprehensive income or any other financial statements. That's why we have notes. They supplement those financial statements, right? So we're going to group them together, and we're going to have one line item called revenue, as you know, right? We add them together, so that'll be 10,500,000. Okay, so now we can, our first line item on the face of our statement of comprehensive income. There we go, right? So our first item, revenue, and it is the 8 million plus the 2,500,000, right? So we add them together. Now, ladies and gentlemen, as soon as you get this situation, if you get a situation like this, where the company has got more than one kind of revenue, they've got more than one source of revenue, and you combine that, what is the result of that? What is the consequence of that? The consequence of that is that now you will have to have a revenue note, right? So now you'll have to provide, as part of the notes to your financial statements, an explanation is included in the revenue. If you had one source of revenue, let's say this company only had revenue from sales, right? Then what you could have done, you could have simply typed their revenue from sales, right? Then you could have typed their revenue from sales, and then you do not need a revenue note. Or you could have said revenue from services rendered, and if that is the only kind of revenue that you generate, then you could specify it there, and then you do not need a revenue note. But as soon as you've got more than one kind or more than one source of revenue, and you are combining there for the sake of the revenue on the face, the line item on the face of your statement of comprehensive income, then you have to have a revenue note, right? While we're there, we already saw that the revenue note is one of the things that they require from us. So this might be a good idea to do it now, right? Let's go to our revenue note. There are some notes that we've got to go and provide. So let's go and do the revenue note while it's fresh in our heads here. So revenue, ladies and gentlemen, simply put, we're going to give it a title, and we're going to give each note a number. So this note happens to be note number 3, and its title is revenue. And then we give it a little introduction, ladies and gentlemen. Doesn't have to be an essay, doesn't have to be a long paragraph. We just give it a little introduction. This is a very short little introduction. So we simply state revenue comprises. We could have said revenue consists of, but it's just good style to have a little intro there, right? We obviously have our reporting currency denominated there. And now simply what we do is we provide the users of the financial statement with what the revenue consists of. Exactly what we said there. Revenue comprises of what? Revenue from sale of goods, as we've seen in our trial balance, 8 million rands, and then revenue from services rendered, 2,500,000. Right. Just for the sake of completeness, we've added the 3 other possibilities that will form part of revenue. But obviously, if the company doesn't have any of that, you don't need to show that as part of your note. So your note would have ended there. Okay. Let me just go to somebody said something there. Yes. Yes, somebody is talking. Oh, must we finish? Okay, ladies and gentlemen, I didn't realize it's 1 o'clock already. So we better finish. Let me just finish this little part off, then we are done. Okay, so that is the revenue, ladies and gentlemen. What comes after revenue? It is also a disclosable item. When Mr. Borman discussed offsetting, he said that you cannot offset revenue from what? The next item that is going to be a disclosable item is our cost of sales. Okay, cost of sales. Let me just finish this, ladies and gents, and then we can chill out for the day. Okay, so the cost of sales. What we need to do, ladies and gents, we need to go to our trial balance. We've got to go and see what's the cost of sales. So in our trial balance, we saw that the cost of sales was 7,500,000. But before we simply take that to our statement of comprehensive income, as you know, there is a little other place that we must visit first. And that little other place that we must visit first is our journal entries, right? You remember in some of the other questions that we've done, I think question 1 specifically was one of them, I think question 4 as well. It was a write down of inventory. In those questions, you had a write down of inventory which you had to journalize. And remember, ladies and gentlemen, if it is an inventory related cost, that means it is going to affect your cost of sales, right? So your cost of sales would have been debited by the write down of inventory once you do your closing entries at the end of the year. So that would have affected your cost of sale. In this particular question, we did not have a journal entry that affects, but just bear in mind you must visit your journal entries as well. Okay, so that means our cost of sales 7.5 million rands, right? Now, ladies and gentlemen, I'm going to almost finish there. Just one other thing that we've got to realize here. I think we've said it in some of our classes. I've definitely mentioned it in Financial Accounting 1 last year as well. We must remember, and this is my final message for today. I know we're a bit over time. Sorry about that. We must remember that when we draw up financial statements, right, any of the financial statements, including the notes, we do not have a debit side and we do not have a credit side, right? So therefore, we must distinguish some way or the other, which in the case of the statement of comprehensive income, which items are income and which items are expenses, right? Or costs in this case, right? So how do we do that? All our incomes will be shown as positives, right? Positives. And all our expenses, if we are using the nature method, and if we are, in this case, we are using the function method, all our cost functions must be shown as negatives, right? So those figures must be shown in brackets. Okay, ladies and gentlemen, next time, not Thursday, I think Mr. Borman will want to do something different. Maybe Thursday, I'll discuss with Mr. Borman first after class. But at some future class, I'm going to carry on with distribution costs, admin costs, finance costs, and so forth.
Mr. Farisberg, you can continue on this question on Thursday night if it's okay with you. That's fine with me.
Okay, that we can then do that way. Okay, perfect.
Okay, thank you.
Thank you, Mr. Borman. Then we'll carry on with this one on Thursday. We'll probably then finish this one, I guess, within a further hour or so, if I can think from other years. And then Mr. Borman will probably start a different one afterwards. Or it might take us a full 2 hours, we'll see. Okay, any questions from your side, ladies and gents? Thank you, Leonardo. You've got 100%. Thank you. You're welcome, Korsar. Thank you, Glody. You're all very welcome. You're all very welcome. I better have a lovely afternoon. Sorry for going a little bit over time. If you've got another class now, just tell your lecturer, Mr. van Rensburg, apologizes. Okay. You're most welcome, Luyanda. Thank you. Thank you, Siwan Kele.
Yes,